And if you're invested in any one of these altcoins, which make up $80 billion in market cap, you are not going to want to miss this video. In this video, I'm going to break down and dive deep into the SEC report to see exactly, do they deem these altcoin securities, and what does it mean for the future of these cryptocurrencies if indeed they are alleged to be securities. We're going to break that down and a lot more, guys. We're going to get into the nitty-gritty, and we're going to start with the notion of what is a security. Now, this is going to be a long video, guys, so make sure you subscribe, smash on the likes, get yourself comfortable with some popcorn. We've got to dive into the documents. There's no point just sitting there reading FUD. We need to research and understand what is going on for our investments. Now, if we sit here and we look at the prongs of the Howey Test, which is the test that the SEC have set for whether something is deemed a security or not, you need to touch upon four different things. The first one is an investment of money in a common enterprise with the expectation of profit through the efforts of a promoter. So let's go through this in detail, guys, because we're going to need to know this before we dive into the SEC lawsuit. Investment of money, okay? So this is you putting money as an investment, okay? In a common enterprise, the term common enterprise was never explicitly defined by the Supreme Courts. However, it remains an important prong of this test. Basically, it's a joint effort, right? It's a joint effort with the expectations of a profit. So when you buy these tokens, are you expecting a profit? Okay, very important. Are you expecting a profit to be derived from the efforts of the others? The purpose of this prong is to separate the investor from the third party. So you're relying on a foundation. Think of it like you're relying on the effort. If I buy Tesla stock, I'm relying on the efforts of Elon Musk and the team to grow the company, to sell more Teslas, to make me a profit on my Tesla stock. These are the prongs of the Howey Test. Now, it's very important to understand from the outset here, why is it that crypto people are fighting against this definition? Now, I want to share my view first and foremost, and my view is that, look, the vast majority of the thousands of coins being listed every single week in crypto, they will be deemed as securities. They are securities. People are investing in them to get a return. However, there are a handful, such as Bitcoin and Ethereum and many others, which may not necessarily fall into the bucket of a security and may be deemed either a commodity or a utility token, or maybe they need to come up with a new definition for these tokens. Now, of course, regulation is needed. If we want mass adoption, if we want more people to take crypto seriously, if you want the institutions with the big money to come in, we're going to need regulation. The problem we as a crypto community have is we do not want overreaching. And that's where this debate comes in. So we need clear guidelines on the definitions. Now, it's important to remember that this lawsuit, the lawsuit that was shared on Monday towards Binance and shared with Coinbase the day after on Tuesday, these are derived because what the US SEC is saying is if you are trading unregistered securities and you've not registered yourself as an exchange, as a broker with the SEC, that is the problem. And all the SEC have to do in these filings is prove that one coin listed on Coinbase or Binance US is deemed a security. So they've given tens of examples in these lawsuits, but they only need one to be proven right. That's important to note. But it also means that we can get clues from the documents that they're sharing of, are some of our other investments going to be deemed as securities? Now, once we've understood that, which we're going to go through and do today, we then need to ask ourselves, what are the implications, right? Because a lot of people are panicking, but they don't actually know the implications. And the implications are, if our cryptos are deemed a security, this will slow down crypto, but it could help increase long-term adoption, right? Because what it will mean is that all the exchanges would then need to register with the SEC. Fine. Now, we know Coinbase is having a separate argument saying, we've been trying to register with you. You've not made it clear what the path is, okay? They would need to comply with certain regulations, just like any other normal TradFi does. Could also mean that certain cryptocurrencies would be deemed illegal. And this is where it gets a bit sketchy. This is why so many projects are concerned about being deemed a security. They feel that if they are deemed security and they go to the SEC to get to be granted a license, they feel like they're going to be rejected and moreover deemed illegal and therefore won't be able to trade. So this is part of the issue. Also, from an exchange perspective, sometimes the reasons exchanges are not open to going down this route is they would then have to strictly comply with AML, anti-money laundering, and KYC, know your customer. So this is the implications. It's not the end of the world if things are deemed a security. It just means that you will then fall into the fold of regulation, which many globally think that will slow down the adoption of crypto. So that's the battle we're facing right now. Now, of course, on the other side side of the spectrum, you've then got loads of people that are saying, oh no, but our coins are utility token. Okay, so let's take a look at what is a utility token. A utility token is a cryptocurrency on a smart contract blockchain that serves a specific function in a crypto project's ecosystem. Unlike cryptos like Bitcoin, utility tokens aren't designed to be real-world medium of exchange. Instead, a utility token only has use case within its respective smart contract protocol. Okay, within the ecosystem. Okay, and we can go in and we can look at different examples, but for example, it may be used for voting, it can be used for gaming, it can be used to give some perks, or to tip, or to even pay the network fees, right, like Ethereum. Okay, so speaking of Ethereum, let's come on to Ethereum. So why isn't Ether deemed a security? Now, this is where it's going to get very confusing, guys. You have to bear with me throughout this video. Ethereum originally was not deemed a security. Okay, so when you go back, years ago when William Hinman was the director of the SEC's Division of Corporate Finance, he stated the following. He started with a rhetorical question. He goes, can a digital asset that was originally offered in a securities offering ever be later sold in a manner that does not constitute an offering of a security? In other words, what he is saying is, if you started off with a pre-sale, if you started off treating your token, if Ethereum, when it started, was a security, can it be that in a future iteration, later on, as Ethereum became mature, could it now not constitute a security? And then he answered these questions, a rhetorical question. He answered the question in his speech, and he said the following. He goes, yes, for cases where there is no longer any central enterprise being invested in, or where the digital asset is sold only to be used to purchase goods or services available through the network on which it was created. In other words, he set the precedence, Hinman set the precedence in his speech and documents, which, by the way, XRP are fighting for these documents to be released. The SEC lost that, right? SEC was trying to say, no, we're not going to release the Hinman documents. It's not relevant part of the XRP case. XRP is saying, absolutely it's relevant. We need access to it. If Hinman has set the precedence, because obviously law is all about precedence, and set precedence that that Ethereum is no longer can go from a situation of starting off as a security to then not being deemed a security later on, then we can use that basis as well. So this is an important step in the journey of cryptos, because what it says now is you can initially start off, there is precedence that initially you could start off as a security, but then you could no longer be a security later on. And we'll come on to that when we get into the documents. Now, there is something also interesting which we need to look at, okay? So obviously here, Hinman's speech raised the possibility that a token can start as a security and evolve into something else. We'll call it a currency that could be sold and traded without the SEC regulation. By the way, this is based on James Park. It's on the Harvard Law website, but he's a professor of law at UCLA. And this was a summary posted on the Harvard Law website. I'll share the link for you guys as well. So when it raised 18 million, this Ethereum, through an ICO, Ether was selling a security. The founders of Ethereum sold Ether to investors to fund the common enterprise of creating a platform to launch blockchain products. While the investors had no right to any profits generated by Ethereum, they hoped that the value of Ether would increase after the platform was successfully completed. They're saying at the initial point when they were doing this ICO, when the 18 million, it was a security. But you can argue that now it's not a security. Ether is the main internal crypto fuel of Ethereum and is used to pay transaction fees. Many ICOs involve utility tokens, which we just covered off, which can be used to pay for services such as cloud storage or access to ad-free internet browser, okay? Because a token can be used to pay for services, it is difficult to classify solely as an investment. I don't use my Tesla shares. I got Tesla shares. I don't use my Tesla shares to pay gas fees. I don't use it to, access some FILECOIN or anything else. I'm not, right? It's just sat there. I'm sat there because I'm holding on to it as an investment. It's definitely a security. I'm waiting for Elon Musk to do the work to grow the value of my Tesla shares. So this gets interesting now. At first glance, a utility token offering can be likened to the pre-sale of a product rather than the sale of a security. A diverse range of products such as video games has been funded. You guys are familiar with this, right? Like Kickstarter and all these other platforms. You can go list there. Your backpack does not exist yet. You want to build this new state-of-the-art backpack. It does not exist. You can go ahead and do a pre-sale. Right? And that pre-sale funds you use to go build the factory, get the designs made of the backpack, and eventually create this backpack which everybody wants. Okay? So that's what the other side of the argument is. Look, we're doing a pre-sale to build Ethereum, to build Cardano, to build Solana, and we needed the funds to come in so we could build it, but we don't want to operate as a security. We just needed that to make the product functional. Now, here's where you get to the paradox, also known as the Hinman Paradox. Selling tokens through an ICO without SEC registration requires escaping what we call the Hinman Paradox. A token can only be widely distributed, right? Think of Ethereum. You can only put Ethereum in everybody's hands if the project it is associated with is functional. But a blockchain project can only be functional if its tokens are widely distributed as well. So you've got this bit of a paradox where one can't happen without the other. So in other words, what Ethereum would argue is, well, we can't make Ethereum functional the way we want it without doing the ICO. But the SEC would argue you can't do the ICO without it being functional. Which comes first, the chicken or the egg? And this is why you get a very complex paradox going on here. Okay, so now we've got the broad kind of understanding of where we're at, a little bit of a tricky situation. Now let's jump into the documents with that understanding to find out what perspective is the SEC taking on some of our favorite altcoins, and what does this mean for our investment? Okay, so for the interest of time, I'm going to be flicking through this. I've already gone through the 160 pages for you guys. I'm going to point to some of the pertinent bits, but of course, if you're investing in any given one of these projects, feel free to download the PDFs, have a look at the paragraphs for the pages for your individual projects. So now if we kick off here, we'll start off with this section here. It says, nevertheless, set forth below are additional details regarding a non-exhaustive list of 10 crypto assets. So remember, what they're saying is this list I'm going to share with you are the coins we think are showing qualities of being a security. And if the courts agree that one of these are a security, then this whole lawsuit passes through, because this whole lawsuit is saying, oh, Binance, you should not, and this is the Binance document we're going through first, Binance, you should not be listing any securities and trading unregistered securities. Very important. Okay, so this is not supposed to be an exhaustive list. This is not the SEC saying these are the only ones. So if you're holding a token which isn't on this list, you're not out of the woods, right? It doesn't work like that. What you need to be looking at is looking at the qualities which we're going to go through and see if some of those are listed. From the time of each of their first offer or sale, each of these crypto asset securities was offered and sold as an investment contract and was and is a security. And now this is the interesting bit, right? Like we just covered off. Maybe it was at one point a security, but does it continue to be a security? That's the other question that will have to come up in court as well for each of the individual projects. So they start off with Solana. According to Solana's website, SOL may be staked. This is one of the issues that straight away Gary Gensler doesn't like, right? The staking procedure. We'll then carry on and says Solana sold approximately 177 million SOL, raising over $23 million. So again, pointing to the pre-sales of these projects. And you'll see a similar trend going along between all of these. Solana Labs stated publicly that it would pour the proceeds from its private public Solana sales in omnibus crypto wallets that is controlled, and it would use those proceeds. It would use those proceeds to fund the development, operations, and market efforts with respect to the Solana blockchain to attract more users to that blockchain. Now, this is where it gets important. This is the crux of Gary Gensler's argument, this bit right here. Therefore, the value of SOL itself, given the need for those who wish to interact with the Solana blockchain. So in other words, they're saying that the direct actions of Solana Labs are impacting the value of the SOL tokens. And you and I, if we hold Solana, are doing that by process of the Howey Test. We're sitting there in a common enterprise. We've invested money, waiting for returns, expectation of profit on the actions of a third party, i.e. Solana Labs. Okay, this is the crux, and you're going to see this pattern on each of these being listed here. Okay, now let's carry on. And what you'll see is Solana Labs undertook other promotional efforts to increase participation. And this is where, they get into the nitty gritty. 90 episodes on their YouTube channel. They did interviews. They had a YouTube channel with over 37,000 subscribers. They've got a dedicated Telegram, Twitter, Reddit. Okay, so this is where they're saying, look, you are going out there doing promotional activities, trying to push the value of Solana. That's the argument here. Because remember, Elon Musk cannot go, using the same example again, Elon Musk cannot go and create YouTube channels pushing the value of Solana, of Tesla token, right? He's not allowed, and he's been in trouble for doing that because he does do it sometimes. He's naughty, right? What he can do is say, buy cars. Cars are amazing. A Tesla car you need an electric car. This is the best electric car out there, right? Solana can go out there and say, this is an amazing platform, great layer one solution. They cannot push the SOL token, and this is where they're coming towards. This marketed burning of, this is an interesting point, guys, because there's a lot of the times through this document, they touch upon the idea of burning and the notion of deflationary tokenomics. Now, we know a lot of cryptocurrencies have plans to implement deflationary mechanisms in their tokenomics. Now, what's said here, this deflationary mechanism, according to the SEC's lawsuit here, has led investors to reasonably view their purchase of SOL as having the potential profit to the extent there is a built-in mechanism to decrease the supply and therefore increase the price of SOL. In other words, what they're saying is, when I invest in Solana, and maybe they're right on this point, when I invest in these projects which have burning mechanisms, I'm doing so knowing that there is a feature of Solana, this burning mechanism, which will reduce the supply and therefore increase the value of Solana. Okay, so they're saying that the Solana labs are creating that, knowing fully well that that's going to attract us to buy that because it's an investment, right? That's the argument here. Now, this is where it gets quite worrying. Now, of course, Ethereum is not included in any of these, right? Ethereum is not included in any of these. And we know that from the Hinman documents, Ethereum was deemed not to be a security at the time. But Gary Gensler's remained muted around this. Gary Gensler stayed tight-lipped around Ethereum. We'll come on to this separately. But this is interesting because he's talking a lot about burning. And what do we know about Ethereum? Ethereum recently did the EIP 1559 upgrade, which resulted in a burn dynamic in Ethereum as well. And that was after Hinman had deemed Ethereum to not be a security. So again, has the situation changed for Ethereum? We need guidance. We need clarity. We don't know even for Ethereum. The only one really you could be sure about right now is Bitcoin. Let's then carry on. We then have Cardano for you guys holding Cardano. Similar story here. IOHK conducted a token sale during which they sold 25.9 billion ADA and they raised approximately $62 million. Again, pre-sale, pointing out the fact that, look, you're doing a pre-sale no different to a stock doing an IPO, and therefore you should be deemed a security. That's their argument on this point. If we keep going down here, these three entities collectively received 5.2 billion ADA following the initial mining of ADA, approximately 16.7% of the total supply. They have used these proceeds from ADA sales to fund the development, marketing, business operations growth of the Cardano protocol. Again, what SEC is trying to say is they're conducting themselves as a security, right? Again, let's use the example of Tesla. Tesla would IPO. They'd sell Tesla stock, you give dollars, I take the dollars as Elon Musk, and I go build a factory, I go hire a team, I get engineers, and I build the production line, and I sell cars, right? I'm using those tokens to drive value in the business, which drives your investment, therefore security. That's the argument they're making, saying the cryptocurrencies is doing the same thing. They're taking your money and they're using your money to do the Byron upgrade, the Shelley, the Gauguin, the Basho, the Voltaire, and this is going to drive the value of ADA, therefore you must be a security. This is the argument they're making. Then we can move on to MATIC, Polygon MATIC, and again, look how they just go after the top big projects here. Again, Polygon MATIC sold approximately 4% of the total supply of MATIC in 2 early rounds of sales, 165k, raising 165k at a price of that and another 450k. Okay, the information Polygon publicly disseminated has led MATIC holders, including those who purchased MATIC, to reasonably expect profits from Polygon's efforts to grow the Polygon protocol, which in turn would increase the demand and value of MATIC. This is the argument, and again, you can make the same argument for pretty much a lot of these coins, right? A lot of the coins use similar structures, and this is why this is so concerning for the market. Let's keep going down then, and you can see again they quoted a tweet from one of the founders of Polygon, Sandeep, and it says, he's basically talking about the token price, right? He spoke about the fact that they managed to hit an all-time high and came back from the dead, right? Look at this. He even used like a quote from a UFC fight and say, look, we came back from the dead. So again, it's no different to Elon Musk tweeting about the price and trying to pump the price of Tesla. If it's deemed a security, you're not allowed to do this, right? Now, of course, the argument from these guys, the crypto side, was no, we're a utility token, which of course we covered off earlier on. We're not doing it as an investment contract. And similarly with MATIC, there's a burn mechanism, right? That it burns MATIC tokens. Again, this has led investors to reasonably view their purchase of MATIC as having the potential for profit because there's a built-in mechanism to decrease the supplies. They're proper going after a few different things. Did you have a pre-sale? Did you use those pre-sale funds to fund the company and grow the company? Is it clear who those founders are? Right? Do the investors look toward these founders to grow the company? This is one of the reasons Ethereum has managed to get away with it to this point. Is they're sufficiently decentralized. It's not that everybody's just looking to a couple of people in a senior management team to run Ethereum. It's sufficiently decentralized. And of course, with Bitcoin, there's no one to go after, right? There's no figurehead, not even a Vitalik. But with other projects, there's a clear 1-2, there's clear founders, it's set up like a company, and that's causing a problem from this perspective. We'll then move on to FILECOIN. Again, FILECOIN coming in, and Protocol Labs conducted a 2-part token sale, and again, similar structure going after similar things here, and another one that is being targeted by the SEC. That document also stated that FILE was to be distributed to groups critical to the network's creation, development, growth, and maintenance, with an allocation as described as below. Yet again, FILECOIN has implemented a process to burn FILE tokens, thereby reducing the supply, and this has led investors to reasonably view the purchase of FILE as having the potential for profit. They're proper going after burning here, guys. You're seeing this trend as we go through these documents. Very, very clear the bits that they're going after. We then move on to Cosmos Atom. Similar thing, they did their pre-sale here, which they called a fundraiser to collect donations. And you can see how they're putting it in quotation marks, saying, look, they're just trying to skirt the rules here. They know what they're doing. They're doing no different to what the other projects are doing. They just wanted to call it a fundraiser, and they're collecting donations, but it was the same thing. They took that money and they used it to fund the development of their ecosystem, hoping to drive the price of the Atom token. Are you following the argument that the SEC is making here? This is what the SEC are making. SANDBOX, another one they come up with. Of course, SANDBOX being one of the Animoca brands, raised $2.5 million in cash and crypto assets through TSB. And again, Sand has been available for buying, selling, and trading on the US Binance.us. Again, that's the point. They're listing this point next to each cryptocurrency, because if one of these, which we're going through, is deemed by the courts as being a security, and Binance has been buying, selling, and trading it on Binance.us without it being registered, that's enough to then carry on proceedings against Binance, which is what they're trying to do. The information TSB publicly disseminated has led Sand holders, including those who have purchased Sand since August 2020, reasonably to view Sand as an investment in and to expect profit from TSB's effort, remember the third party in the Howey Test, to grow the Sandbox protocol. Let's keep things moving. Let's also take a look at Mana, DECENTRALAND. They held an ICO of Mana tokens as well, raised approximately 24.1 billion. Again, using those funds to fund the marketing, business expenses, completion of decentralized platform. And you can see the split here of how that money went. They made this all public, and SEC's gone and taken that from their website and put it in their law case. Happy days for them, and onwards they go. Okay, so again, I'm not sure if DECENTRALAND have a burning mechanism, but if they did, that would have been mentioned here as well. Now we come on to ALGORAND. This is the interesting one, right? Because ALGORAND is quite tight. Sylvia McCarley, the founder there of ALGORAND, is quite tight with Gary Gensler. They actually get on. Gary Gensler has mentioned him in a few of his MIT lectures as well. So he was a big proponent. If anything, you can say that Gary Gensler at one point was promoting an unregistered security, right? Because he was kind of saying ALGORAND is a very good blockchain. Is he not promoting it given the stage that he's on? The ALGORAND blockchain uses a consensus algorithm called pure proof of stake. Fine. Again, ALGO token sale on about June the 19th, selling 25 million, raising 60 million here. In other words, in promoting the ALGO token, the ALGORAND Foundation tied the potential growth of the ALGORAND blockchain to potential demand for the ALGO token itself. This is the important bit. They're trying to separate in order to say you're not a security, you have to separate the functioning of the product from the token. We use Tesla's example as a clear security. You can't separate the two. If they sell more cars, the stock will go up. If they sell more cars profitably, the stock will go up. If they can't sell cars, the stock will go down. They're intrinsically tied, and therefore, obviously, it's a security. And that's the argument they're using here, is the two move intertwined. As the efforts of the ALGORAND Foundation go up, as they do more work and better work to grow the blockchain, that's leading the ALGO price to go up, and that's their argument. Whereas obviously, these foundations are going to say, no, ALGORAND is a governance token, it's a utility token, it's used for gas fees. That's the argument on that side. You know, Sand is used for our ecosystem, DECENTRALAND tokens are used to navigate the metaverse. That's the argument being made from that side, is where a utility token, leave us alone. We may have started as a security because we did our pre-sale, but like Hinman set the precedent, like Ethereum, you can start off as a security, but now doesn't mean we're a security now, right? Doesn't mean we're a security now. Of course, if you were deemed a security in the past, maybe the SEC can take retrospective action, right? They could probably take retrospective action to say, you were a security then in the early stages, you shouldn't have been trading, and it shouldn't be listed on these exchanges, and therefore they can take retrospective action from there. But for now, and going forward, they could be deemed a utility token still. So look at this. The information ALGORAND Inc. and the ALGORAND Foundation publicly disseminated has led ALGO holders, including those who have purchased ALGO since June 2019, reasonably to view ALGO as an investment in and to expect profit from ALGORAND, okay? Inc. and the ALGORAND Foundation's efforts. This is the important bit, the third party. right? We're not just expecting returns from ALGORAND. They're saying you're expecting returns to come via your ALGORAND because of the effort of the foundation to grow the protocol, which in turn would increase the value of your token. Okay, that's the point of the security, right? You can't point to anybody's efforts, any single person or team's efforts to say why Bitcoin's going to go up in value. And that's why Bitcoin's got such a clear path to just, it is a commodity. Who are you going to point to? Like who? Satoshi's not there. That was the genius behind it. Next up, we got AXIE Infinity, right? One of the games, a major blockchain game where you had your digital pets called AXIEs. And again, similar story, right? They went ahead and they raised their money. They raised 864K there. That same year, Sky Mavis conducted a public sale, resulting in distribution of 29.7 million. AXIEs raising another $2.9 million. And again, listed on Binance.com. Shouldn't that say Binance.us? Oh, there you go. And Binance.us. Sky Mavis publicly disseminated has led AXIE holders, including those who have purchased AXS, to reasonably view AXS as an investment in and to expect profit from it. You're seeing the pattern, guys. Same pattern. You do an ICO, you're taking that money, you're funding development, your efforts directly are linking to the token price going up, and people are holding your token with the expectation of profit, invested their money in it, and therefore that's our argument for you being a security. That's their approach, and at least we now know what their approach is. And then last but not least on this list, which is interesting that it came up on this list, was COTI. Again, a very small project. I mean, we were talking about billion-dollar market cap projects here. I mean, this is, like 60 million market cap in COTI, but maybe it's listed because of its ties with ADA, and maybe that's the only reason why, because they're the official issue of the JED stablecoin on ADA, so maybe that's why they're listed here. But again, COTI conducted an IEO on a crypto asset trading platform for approximately 46 million COTI. They raised $3 million. COTI has a maximum supply of 2 billion COTI. Same thing, guys. Same pattern here. Now let's switch over to the Coinbase lawsuit, because in the Coinbase lawsuit, all the same ones were mentioned, right? You had AXIE Infinity, you had FILECOIN mentioned in here, you had SOLANA, you had CARDANO. All those were listed in here as well. POLYGON, MATIC. But now there's a few more. CHILIZ. CHILIZ is a token on the Ethereum blockchain. Again, completed their fundraising for $66 million. You can also take a look at, again, to fund the development, marketing, business operations, growth. If we can also take a look at what the next one is, which I believe, oh yeah, burning as well. So CHILIZ also have plans. So not even the fact that they have burning, they had plans to engage in burning, and that's enough for them to use that as an argument in their lawsuit. Flow also came up. They raised approximately $24.6 million in a pre-sale. And again, they think they're taking that funds to go ahead. I mean, look at this. This stated distribution of Flow tied to the fortunes of Flow holders to each other and to the fortunes of the Flow developer team. They're saying, look, by you distributing the pre-sale like this, you're all together in a common enterprise. Remember, guys, common enterprise is one of the prongs of the Howey Test, and you expect that the team, the development team, and this team here will do work to drive the value of your Flow tokens. Right, that's what they're expecting here. That's what their definition is. ICP also mentioned here. They between 2017 and 2018 engaged in free funding rounds. They listed that there. Again, they use that money to fund development, marketing, business operations, growth. Near Protocol also raised approximately 34.1 billion through the offer and sale of notes that were convertible into then the non-existent. Remember, it's a pre-sale, non-existent Near token. So they're selling, and then they use that money to go build the ecosystem because the Near token wasn't even there yet. And again, intended to use the proceeds of the sales for the development of the Near protocol. They raised an additional 150 million for a private sale thereafter. And again, it's led Near holders to reasonably view Near as an investment in and to expect profits from Near and the Near Foundation's effort to grow the protocol. I guess another way to kind of think about this is, would anybody hold Near protocol? The only people who should hold Near protocol is what the SEC is saying, if you're not a security, are people who want to use it for utility. But the SEC's argument is no, people are holding Near protocol for an investment purpose. And to a large extent, you can probably say that's right. All right? If we're being true with ourselves, to a large extent, you can say a lot of people are holding tokens for return, for an investment, in which case they should go through the right routes of register themselves as a security. Some of them will no longer exist, but at least we can move on. The beauty then on the other side is that if we do that, that then allows institutions to get involved, which will grow our investments even quicker. So it's like it's a two-way street. Near's founders remain actively involved in the Near protocol today through the Near Foundation. In fact, Poloshukin, I can never pronounce his name, Poloshukin sat on the Near Foundation Council, its governing group, until March 23. Again, this is the example of having a spearhead, having a figurehead of the project, right, who's a clear leader of that project, which they can say, oh, look, everybody's looking to him and his efforts to grow the ecosystem and therefore grow the token. So again, if you're holding an altcoin where there's a clear person at the forefront, where there's a clear figurehead that is promoting, that is driving, that his action is directly leading to the growth of this ecosystem and therefore your token, you can probably increase the risk of the chance of them being a security. NEAR has also marketed the feature of the NEAR protocol that automatically burns 90% of the NEAR tokens accumulated as fees. Again, they're going after this burn mechanism. They don't like it. Burning of NEAR has led investors reasonably view that their purchase of NEAR having potential of profit. VGX, we don't care. That's done. We'll also take a look at Dash. You can look at Dash. Similar thing going on with Dash. And then I think the last one they mentioned was NEXO. NEXO, again, is a native exchange token for NEXO platform. From February through to May 2018, they raised approximately 52.5 million in its what they called a token sale consisting of initial airdrop distribution and an ICO pre-sale. And again, another thing which came up here, finally, beginning in December 2020, NEXO conducted multiple NEXO token buyback programs pursuant to which NEXO repurchased from investors over $150 million of NEXO. Again, treating it like a security, right? This is something you would do on the stock exchange. You would do buybacks to get, buy the stocks back when you've got extra cash flow, right? So again, these are the behaviors that the SEC are pointing out. So there you have it, guys. There is the SEC's lawsuits and the data listed for every single one of the altcoins they mentioned in their lawsuit. Again, it's important that we remember that you want to focus on the points they're making more than the cryptos they picked. Yes, they picked a bunch of cryptos, but they're only doing so because they want one to pass. They throw 10 in, they hope one is deemed by the courts as a security, they'll clear that through, and they'll use that to then file the suits against Binance and file the suit against Coinbase as well. But if you look at the key premise and look at the key tenets that they're pointing to, that will then give you a clue for the kind of things they're looking for. And if your projects are holding them, then that's something you need to take a deep look at. So the kind of things you're going to want to be looking for are pre-sales, right? Pre-sales, token buybacks. You're going to be looking for a figurehead where there's a clear figurehead and a management team and a lack of decentralization, not just amongst the nodes and the operators, but amongst the senior leadership team. Do people look to one or a set of people or one certain foundation to drive the growth of that ecosystem? You want to also be now looking at burn mechanisms. Unfortunately, they're looking at burn mechanisms. You want to look at when they did the pre-sale, was those funds taken and used to drive the growth and the marketing of the project? But of course, we then need to tie that back with the Hinman documents, which is where this all rests in, and which is why XRP is leading the charge right now with Ripple to decide where we're going to head to for all of these other altcoins. Because the argument hinges on what Hinman just said, which is when he deemed Ethereum, he said it's possible that Ethereum could start the journey as a security, but then when the system is functional, when it's up and running, it can operate as a utility token. It can operate not as a security. So this is all going to lie in those documents. Exciting time ahead, because the reality is, yes, it might lead to some short-term pain, but long-term, we need clarity. The one thing stopping adoption is clarity, right? Think about it another way. When we started creating cars, we went from horses to cars, and you've got cars on the road now, but there were no traffic lights, there was no regulations, there was nothing. You could do what you want. You just turned on your motor and you went. You're going to have accidents, you're going to have all sorts going on. People don't know what they're doing. That slows down adoption. If there's no clear rules, people will not adopt, right? Risk-averse people will go, no, I'm not going to drive. That's dangerous. There's no traffic lights. There's no rules. Everybody's just doing what they want. It's chaos out there. But as soon as you put some stop signs, as soon as you put some traffic lights, you start to get that law and order. The problem is, what we don't want as a crypto industry is overreaching. What we don't want is them to go too far with regulation. But that's not the issue right now. The issue is not overreaching just yet. The issue right now is a lack of clarity. Everybody from CZ to Brian Armstrong at Coinbase are saying the same thing. Tell us what to do. We will do it. We cannot operate in gray areas. If you show us how to come in and register, as you say, we will come in and register. If you tell us what is the criteria you're deeming for securities and otherwise, then you'll make our life easier. But you can't just not make any progress on this and expect us as a publicly listed company in the case of Coinbase to just sit here and do nothing. You need to give us the clarity so we can continue with our business. But at the same time, the SEC and the CFTC can't even agree on Ethereum, right? So there's a lot of work to be done here on both sides. But one good thing is we're moving forward, right? There is a hearing on June the 13th. That's going to be an important one. It's also on CPI day and the day before the next FOMC meeting. But there's a lot going on. Hopefully this video gave you some clarity on what's going on. What does this all mean? How does it affect your cryptocurrencies? But the long-term story of it is there's no reason to really panic, right? Stay calm, analyze the data, and see how this plays out. If you found this useful, guys, smash the likes. Don't forget to subscribe. As always, check out the links in the description. And I'll see you in the next one.